It's interesting to see that tough talk that we've seen all campaign prior to President-elect Trump winning the campaign back in November. But since then, or since the insinuation that he was going to win, you saw the dollar index move higher because of those tariffs. You saw about an 8% jump in the U.S. dollar index. The VIX still sitting out at 16, and equities moving higher. There is, to John's point, a lot of uncertainty. But what I think today with the catalyst for this move higher, which seemingly is selling off just a titch here, but what the catalyst was that there's going to be less tariffs, and those tariffs come with unintended consequences. There's inflationary concern, but on the flip side, there's also potential more revenue for the Fed. There's manufacturing jobs that may be reshored. So all this uncertainty is probably not going to be unpacked on January 20th, let alone January 21st. But I think what you have to realize is that dollar index, the U.S. Treasury, look at the 10-year note, up at 4.6%. That's going to incite volatility. I think we're in a bit of a complacency. We're all focused on AI again. It's wonderful to see NVIDIA back above $150, but I think when you see the actual tariff policy be implemented and actually transact into the economy, that's where we're going to see some volatility. And I want to be hedged, and I like using a couple different ETFs, Kelly. If you look at DBEF, that's a way to be hedged. I think you also can look at the wisdom tree if you want to have a select exposure to some of this. But being hedged here with this currency risk, that's going to be a big theme, and no one's really talking about in Q1 right now.